Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video and market update for Thursday, March the 5th. And normally I do the update on Wednesday night, but we switched some things around this week. So I'm with you guys tonight on Thursday night. So I've got the S&P up here. We continued a little erratic action today to the downside. And I kind of thought it was questionable overnight. Of course, big sell-off, and then I thought we would rally here. I had this level at 30.80, and we hit that level. Kind of came through it, and that's what's been a little frustrating with a lot of these levels is we don't hit them exactly. We maybe go through one side or the other, but hit that level and failed basically all day long. Kind of ended up down here at 3,029.99.83. This is the SPX, not the ES. So, another not so good day unless you're short. And this has been definitely a trader's market for sure, and will continue to be. So we'll talk about that in a minute. But let's look. Let's go look in a little bit longer time frame here on the S&P. Let me back this out to a 5-day chart here, and you can see that this was Tuesday when we got the Fed emergency rate cut right there, and big gap up. That was from 30.60 to 31.36. I mean, that's a pretty monster move, and then it failed all day long. And then we did come rallying back at the end of the day. But this is kind of a telltale sign to me that, for one, we get an emergency rate cut. That does, people always assume that it has to be at a Fed meeting, and it does not. And got a 50 basis point instead of 25, which I thought was that's pretty interesting. All of this is to offset the coronavirus concerns and slowdown, which is coming, I suspect. And think about this. Normally we get a 25 basis point cut and we rally, and then we rally for 3 days after that, And this couldn't even hold a rally for 45 minutes, and then we're selling back off. So not positive for the market. And as it turned out, the next day, I guess the market overnight here kind of sat back and goes, wait a minute, we got 50 basis point cut. That's going to help everything out, and we rallied back up here and then gave it all back up. So very, very, very tough trading, or tough to be on one side or the other. I have been mostly in cash and been really scalping this thing, kind of as we go, and it's working pretty well. I would say don't commit to either side of the market wholeheartedly. I was actually looking yesterday, and again, this is on the S&P. I was actually looking here if we took out this high, the 31.36. The green line is a tree line. That's a voodoo tree line, and we cleared it. And I thought if we took this level out here yesterday, which I thought we were going to, thought if we took that out, we're probably going to go to 3150 is the next stop, and then maybe 3200. And you can see right up here we've got a skyline at 3187, then there's 3200. And I was going to load the boat short up here for the next run down, but I never got the chance to. I got a little short on, but not enough. And so today it was kind of confusing because we didn't get continuation to the upside, and we got kind of more selling than I would have anticipated. So tomorrow we have payrolls, and typically we rally on payrolls, and this might be the last good payrolls we get for a while. Maybe I don't know. I probably shouldn't say that because I don't know what kind of impact we're going to have on coronavirus. Everything goes back to coronavirus, right? But let me show you what I'm thinking out here. And we've been looking at this. This is a 1-year chart, and I had been saying up here that we were going to get into some chop. I did the trade of the week and thought we were going to get some chop here with some extreme kind of back and forth action, this with extreme up to here, down to here, and we completely blew all that away. So I got that same kind of thought process, but I think it's lower, honestly. You see this white line right there? That's a snow line. I would say, and that's 32.30. I would be surprised if we get up there. And I mean, we always can. There's no telling, anything up here to these higher levels is going to be faded. And I think we could actually take out this low. There's that snow line there. That's a big level of support on the way down. I think we could go all the way down to this fire line, unfortunately. And all that depends. Let me put this on a 2-year chart. All this depends on that kind of puts it in perspective. And there's a voodoo lines on here, so just take that into account. But everything right now is news driven, depending on coronavirus. And I keep hearing they're shutting down schools and all this kind of stuff. Of course, travel, and people send pictures of Target with nobody in the whole store, that kind of thing, and all that's going to affect people. People aren't out spending money. Yes, it will affect us, and there's going to be a boomerang effect. So the takeaway from this is, don't think this is going to be over in a week, because it won't. Even if everything clears up and they miraculously find a cure, a week or two from now, it's kind of one of those things. The damage is already done, or it's being done right now, enough to slow us down, globally. So just be very careful with this market. And I actually really like this kind of market. This is my thing, because I like trading volatility. And so this is kind of prime time for me. And I did want to mention, I don't have a page up for it yet, but I am doing a class. It was intended, I mentioned last week, I had set up to do a black swan, how to trade a black swan event class. It's been on the calendar here for, maybe a month or two. And now that the black swan-ish event, this is not black swan yet, but it's pretty severe. It's unfolding. This is actually going to be really timely, because what we're going to be talking about is how to trade this and trade the volatility. So you will be getting, you'll be seeing, I'm sure, emails and stuff on that, and I'll have a sales page, I think, or promotion page for, I think I'll have it tomorrow. But in any case, keep an eye out for that. The webinar is next Wednesday night, I believe, on the 11th, and then the class is next Saturday on the 14th. So anyway, keep an eye out for that, and if you're in the trading room, of course, ask me about that. Tomorrow I'll be in there. And this is good stuff. I mean, I like this. And, again, the takeaway is to tread very lightly. Cash is king. And when you have the setup, to take it, jump on it. And don't get committed one way or the other to direction, because, we are, let me zoom in right here, and again, I'll show you. I think we're going to see a lot more of this and this before this resolves itself, and I think it'll ultimately resolve itself higher. And I also think that at some point we're going to look back 6 months from now, maybe, maybe we'll look back and we'll go, I can't believe everybody lost their mind over this, because it's not that big a deal. If you look at the statistics. So anyway, all that being said, again, just trade light, be nimble. Trade very selectively. Join me next week for how to trade volatility, and we'll have a lot of fun with it. So with that, let me wind it up, and have a great rest of the day, and I will see you in the trading room tomorrow. Take care.
Hey everybody, this is John, and you're probably wondering, or you've probably heard, that we've got a new Squeeze Pro class coming up. Now, if you're familiar with the old Squeeze, that's been something that I've been using for, over a decade now. And so the question that comes up is, why would we need a new Squeeze? Okay, is the old one not any good anymore? Well, the thing about it is that the new Squeeze Pro has different settings in there that gives you more swings at the plate. So not only is the old Squeeze incorporated in there, but there are settings that have been established where we've back tested through years and years of data. And what I found was, had I had the Squeeze Pro before, I would have had twice as many at bats as on Amazon. I would have had twice as many at-bats on Tesla. And in fact, as I went through Amazon and did the back testing, because I did not have the Squeeze Pro on there, I missed 77 squeezes over the course of 10 years on the daily chart on Amazon, which would have resulted, if I was trading 10 lots at a time, an additional $2.2 million in profits. That really caught my attention. So now, by utilizing the Squeeze Pro on multiple time frames, not only do I get more at bats, but there's also tools embedded into it that allow you to see the average length of the squeeze once it fires. I have found that this has been a tool that's improved my trading game exponentially, and I'm excited to share this tool with you. My Squeeze Pro class is coming up on March 7th, so register now to reserve your spot.